What's up, YouTube? It's Joe Catchpolia sitting on the couch making some money investing in fractional real estate online as usual. It's Friday, so I'm doing my 52-week challenge update. If you're new to the channel, what we're doing on Fridays is we're all just sharing what we bought this week. The 52-week challenge is just an idea that we came up with to get started in fractional real estate investing. Just committing to buying at least one fraction of a property each week, which could be as little as a $10 a week investment. If you haven't joined our Discord, there's a link in the description below to that, and that's where that's where I've had most of those discussions. Some people are just talking in the comments to these videos. Sometimes a few people are just messaging me privately. However you want to do it, we're just trying to share our experience with all these different sites. Please do like and subscribe. And in the description to this video, there are links to all the sites I'm currently investing on. Some of them will give you some free money when you invest on there. Some of them won't. Um, you want to read the terms and conditions. You want to do your own due diligence. Just because I'm buying something on one of these sites doesn't mean that you should. All right, let's jump right into it. What did I get this week? So I bought a little bit more of the Johnson on Mogul. This is, they name them, this is, 1302 East 2nd Street in Austin. I bought a little bit of this last week. I decided to go back and buy a little bit more. That's something that I have been doing uh, whenever I get a little bit of, I get a referral bonus from somebody, so I go and buy one more little piece using that, and that's kind of like getting a discount on some of it, right? And so any of the ones that I like, I'll buy extras when I do have those bonuses. Um, but in general, I'm just buying a little piece of each one of these that I like because, still in an experimenting phase. Even though I like a lot of the properties that Mogul puts out, they're still early. There's still no secondary liquidity, so I can't turn around and sell these anytime soon. And so I'm holding off on putting a whole bunch of money on here. Although, to be perfectly honest, it's very tempting. I mean, they just keep putting out quality properties, and it makes me want to do that. Again, do your own due diligence and decide for yourself if that makes sense. So, bought a little piece of that on Mogul. I bought pieces of 4 properties on Lofty. I think I've talked about every single one of these before. Um, they're all ones that I've already owned some of them, and I was just buying on dips. So you can see, I bought I think I might have bought. These are just the ones that I don't have in the liquidity pool, so I probably just bought those for this week. But it was just there was a dip. I bought a small amount with the dip. I probably had some money in the account from a payoff. I think that's what I did. It's just been, a little Kansas City, Kansas long-term rental. It's been, spitting out a pretty good return for me the whole time I've had it. Um, I've just been buying it whenever it dips, to around $40. I don't see any reason not to keep doing that. So every time I see that, I've been picking up a few. And I do have most of them staked, so I don't just own 4 tokens in that one. This is one I probably own like 30 or 40 or something and have them staked. This is one that I do just have a couple of. This has been just a pure, discount. I think I bought maybe just a couple of tokens this week when it gets down into this $15 range. Not a fantastic market, but if you've been watching my channel, you know that I've been doing pretty well buying super cheap tokens and then either turning around and selling those tokens when the price pops back up. Like this one, these are already high enough that I could be selling for a profit. Although it would be a pretty small one after fees. But the real reason I'm doing these is a lot of them either when the property starts performing again, then the tokens will go way up and I can sell, or we push for a real world sale. I did have one of these this week. I think the last video I put out, which was just a day and a half ago, you can see that I had one that I had been buying tokens for, sold in real life, and got a really nice return on that one. Not a ton of money, because it was one I hadn't bought a whole bunch of tokens in, but a very good percent return. So if you haven't seen that video, please check that out. I bought a little bit more of Odom. This is one that I have, uh, and I have 350 tokens listed for sale at $40. I actually took these all of them out of the liquidity pool because we've been getting offers to from iBuyers to buy this property, and they've been coming in like really strong, like over $40 a token is the average expected payout from them. And so, one of the things that I've noticed is I don't want to end up with tokens stuck in the liquidity pool after a sale. I've noticed it seems like there's just some problems with when they wind those down. They've had some issues, and so I just want to have all my tokens available. So I pulled them all out of the pool. Then we had a little dip. That's why I bought a couple more of this. It was all the way down like 25, $26. But so I bought a little bit more. But it is, if somebody wanted to buy these for 40 from me, I'd sell them. They'd probably make a tiny bit of arbitrage there, maybe even not. I don't know. It depends on which offer gets picked up. But I just, I like to either have my tokens listed for sale with limit orders at a price I'd be really happy with them selling, or in the liquidity pool. Um, I don't know. I don't know why I do that. I think that it's, there's no reason not to just hold this, but at the same time, you just never know what other people on the site are going to do. There's people making what I think are wildly irrational choices every day, and so if somebody wanted to cash me out, even though I'd be losing out a little bit of value, getting that money back immediately is better than, maybe a month process that it takes, maybe longer to get those funds. So um, ended up, like I said, just topping up on that. I think I just bought 4 or 5 tokens in there. Bought one or two more of this. Again, this is a property that's listed for sale. It has been for a while. We're probably going to have to drop the price again. I don't own a ton of tokens, but every time that it dips below my basis, I've been buying more. Um, there's still a lot of meat on the bone as far as like where we have it listed for, and my average basis. And so whenever it dips, I've been buying more of that, and it's just one that I use basically when my rents accumulate in my account. If I have enough, I'll just pick up one of those. Um, the other thing on ground floor, I was really active. I just had a bunch of payoffs. I haven't put any money on ground floor in a while. But I just keep getting payoffs and then reinvesting. So I invested in 21 notes. So now I have over 120 notes. I've had, let's see, now I've had 24 payoffs. And it's been interesting to see 4 of those payoffs were ones that were extended. Um, and ended up making a little bit more than I was supposed to on those. So I don't know if they charge penalties. I really don't understand how that works. Um, I do still have one that's extended, but now I have 120. Like I said, I bought little tiny pieces of 21, anywhere from $20 to $50, and it just happened, had to do with how many were available the days when I had payoffs, and I just try to spread it out evenly. So I don't know, that's working out so far. They just keep getting payoffs, just keep reinvesting, slowly growing the total number of loans. So I'm starting to get, really wide diversification. Um, and it really made me feel good to see that these ones that get extended are still paying off most of the time. I do have one of these that, like, that who knows what's going to happen, but so far so good as far as with my overall rate of return. I'm getting 11.1%, so that's not too bad. I really like ground floor for just like, the sort of hands-off nature. I'm not trying to pick properties. Um, I'm just getting a little bit of every single one. Over time, as I start to see, like, if see any patterns with the defaults and whatnot, maybe I'll change that. But at the moment, I just like using it like that. And like I said, I mean, at some point when I'm starting to um, commit more money online to some of these sites, this is one that I think I'll put more onto. And then I bought one piece of a DAC on Saul's Lot. This is a site I haven't talked about in a while. Um, it's a really, if you haven't seen any of the videos on this, I think I have a playlist for Saul's Lot. If not, I have a couple videos that explain it. What they're doing is um, somebody has a property that's ready for sale. Most of the time, it's one that's already listed for sale, or it's ready for sale, or they need to get it ready for sale, and they want to sell a small piece of their equity, and they do what's called a forward sale. And so in this one, I think they were trying to raise, I don't even remember, but it was a small amount. It was like maybe $30,000. Oh, 200 sold at 150. Yeah, so $30,000. Um, or 200 total. 63 sold out of the 200. We're trying to get $30,000. So basically, they sell a piece of their equity at a discount. For this one, it's a 9% discount, which is a projected return at 12%. That's if it's held, for a certain length of time. Um, on Saul's lot, where the real action is if they sell this out and then the property sells quicker, right? Because, if you get to annualize those returns, excuse me, out of over a shorter period of time, you can end up getting really great annualized returns. And so they only have a couple of properties on their site at the moment. This might be the only one. Yeah, those are both sold out. I bought a piece of this one in the past. Um, Honestly, I mean, this one is still very much an experiment for me. I love the idea of it. I think it's a good business model. It's one that I think that over time, if they can get the volume on here, I will have a very similar strategy to what I have on ground floor. Although I think I'll do a little bit more, because they are looking at rent to price ratio, or not rent to price ratio, but they're looking at loan to value ratios on these, right? Um, it's one entity basically that's underwriting all of these. They're getting a third party appraisal, and so theoretically, the risk for all of them should be pretty similar. For now, I am still doing some additional due diligence on my own, and they don't have a whole bunch, so it's not like I'm buying 20 a week or something like on ground floor. But at a certain point, I think I might just start to trust them and buy little pieces of everyone that they put up. If they start to get some volume. It's a different business model. It's not one, it's basically just letting sellers tap into their equity early and paying us a little bit of a premium because of it. It really only works well for us if they get quick sales, right? Like if they take a long time, you might not get a great return. And it is possible to lose money on these, even though, what would have to happen is, um, it would have to sell for significantly below what it appraised for. It would have to sell, or you'd have to have to where they had no money to actually pay you, like do a short sale. I think realistically, in the way the market is today, there's very little risk of that. There is the risk of the new appraisal a year from now, if it doesn't pay off, if it goes longer. So they do reappraisals in the future. I don't know. It's a business model that it's definitely innovative, and I see the need for it. Right now I want to do 100 of these before I'm really comfortable just saying, hey, you should jump into this. Um, but it is, it's one that I think is super interesting, and so I'm trying to support them and buy these. I think that and I think I'm going to make good money along the way. It's just very different from if you said to me, I'm a real estate investor, I'm going to go invest in real estate. This is, if I started guessing models you were using, this would be like my thousandth guess or something, right? Like it's very much different from like, Mogul. This is basically a traditional investment model, right? They're going out, they're finding a property. They're doing a really good job picking properties, in my opinion. They're using short-term rentals or rent by the room to make it work well. But you're getting a little piece of it. It's a levered deal. I think Mogul looks the most like what you think about when you think about investing in real estate. Um, Lofty is kind of close, but they do some weird things with the way the debt's structured and sometimes some other ownership stuff. Although this one has no debt, but some of them do. And then it sort of gets a little bit weird, but you've seen me talk about that in other videos, or if you haven't, you can check out 7 things to know for investing on Lofty if you haven't seen that yet, and you're haven't started on there. This is buying pieces of mortgages, so I think that's at least easy to understand. The concept of the forward sale and everything. That's what I have a couple videos about it, and then also there's a interview with the founder. So even though I think it is, even though it's sort of a different idea, um, I think it's a model that's going to have a lot of legs. I think it will really work, unless we just see rates come way down, and then you can just have easier refinances or lines of credit or whatnot. But even in those instances, I think there'll still be a need for tapping into your equity without having to get a loan. In any case, because of the short-term nature of it, and because of a sort of locked-in profit, although not completely, but essentially locked-in profit. Um, I think there's a lot of reasons to like it as an investor, and if we can, especially if they get to the point where I can invest in 20 of these a month or something, and then getting, really just continue to roll them over. I think that that's where there'll be some real value on this. In the on any given one, I don't think I'm going to dump a bunch of money into, at least not until I'm more comfortable. Um, but it is something that I could see being a really good model once there's some volume for, to get involved in. Um, and obviously I just like the volume because I like the diversification of the risk. If we're going to be buying little pieces, why not get diversification? That's also why I'm investing across several platforms. I haven't bought anything on Collab. I don't think I'm going to buy anything on there for a while. I do keep looking. I haven't been meaning to do another video about fractional.app. Uh, I signed up for their program, and so I got a lot to tell you about that. That'll probably be my next video that comes out. It's been there's a ton of info that I want to share about it. So I have usually I have an idea about, like, okay, I can talk about this in 30 minutes or something, and then I ramble for another 15. But for that one, I'm not really sure. Um, I might have to cut it up, but I haven't figured out what I'm going to do because there's a lot to convey on that. Anyway, that's all I've got to share with you today. Uh, so that's what I bought. I'm curious what you're buying. Let me know. Jump in the Discord, talk about it. Leave a comment, talk about it. However you want. And and again, if you don't want to disclose the exact properties because you don't want the competition, you can just say, hey, I'm buying discounted tokens on Lofty, or I'm buying STRs on Mogul, or whatever it is. But the point is just to sort of have an accountability group, to have other people that you're talking to regularly about the goal. That's why I did it, and there's quite a few other people now that I talk to each week about it, and it's been a lot of fun for me. So jump in, do that. That's it. Now I'm really done. Until next time, gonna keep making mistakes so that you don't have to.